From a high level, the goal of private equity is relatively intuitive. You raise money, you use that money to invest in businesses, and you hope to sell those investments for a profit. And most people understand that. But in this video, I want to explain the different tasks that comprise each of those functions and what it's like on the job actually working on those deliverables. If you're on the deal team or what's called the investment team at a lot of firms, you're going to be focused on this part of the private equity pipeline. You're going to be sourcing transactions, doing the diligence to close that deal, investing in those businesses, and finally, you're going to be managing those investments. So first, let's talk about sourcing those investments. Now, sourcing is actually very important in private equity because capital is relatively common. There are a ton of really large private equity firms who've raised immense amounts of cash, or what's called dry powder, and they are trying to actively deploy this amount of cash. And in a world where capital is more of a commodity, finding the right transaction or deal is quite difficult. And I would say this emphasis on sourcing is actually even more pronounced the earlier you get in terms of the stage of a company. Venture capital and growth equity firms spend a lot of their energy and resources on this sourcing component. But the more mature and later stage that you get, the more likely that the transaction is going to be run by investment bankers and operated through some kind of auction transaction. If you are a private equity VP or principal, you really do have to network with different people in your industry or in your sub-industry to understand what kind of deals and companies are coming to market. This might actually involve going to conferences or taking expert calls and understanding what is happening in your landscape. You'll very likely have to read lots of industry research reports, follow people on Twitter that are in your space, and you'll also have to talk to investment bankers who are talking about the different prospects of deals. If you're an associate or a more junior level person, you might be responsible for maintaining the CRM database. A lot of private equity and venture capital firms use some kind of CRM, just like you would in sales, in order to track different stages of companies. You might actually have to cold email or cold call a lot of professionals at potential companies. It's not the most glamorous work, but someone has to do it, and often it does fall to the most junior person. So next, let's talk about due diligence. Due diligence is the process of analyzing whether a company is right for your portfolio. There are a lot of interesting businesses out there, but not every private equity firm or investment firm has the right mandate or scope to look at that potential company. If you go to a firm's website, you'll often see the kind of companies that they purchased. Maybe you'll even see the size of investment that they typically make and the industries they like to invest in. Remember that private equity firms typically hold investments for maybe 5 to 8 years, and oftentimes a portfolio is going to have between 10 and maybe 25 companies. So they hold on to each of these companies for a very long time. And diligence and deal negotiation is really the most brutal part of the entire private equity process. This is really where your team is going to be sprinting, where you're going to be firing off on all cylinders and potentially even working 80+ hour work weeks. Some common things that you're almost definitely going to have to do in the diligence process involve building an LBO model in Excel to determine the return profile of an investment, developing a work plan to determine how different diligence streams will be managed, studying the company's unit economics and churn to determine whether the company's margins will increase, hiring consultants to evaluate the total addressable market of an industry, putting together an investment committee memo for senior members to evaluate data. And the Excel LBO model is one of the main responsibilities of the private equity associate. And if you are interested in learning how to build this model, as well as prepare for private equity interviews, you can check out our course at peakframeworks.com. Now, it's worth noting that the associate is often the person who builds a lot of these deliverables. They're the one who is responsible for the Excel model, as well as making a lot of the PowerPoint pages, but the decision making and a lot of the critical thinking is really made higher up in the stack. Oftentimes, these materials are going to be presented to some kind of investment committee, and they will make the decision of whether to invest in the business or not. Coinciding with this, there's often going to be a lot of interaction with the investment bank who's running the process, or maybe even the company itself, depending on what the nature of the transaction is like. And there can be a lot of back and forth negotiations, iterating on the materials, and making sure that both sides are amenable to the deal. Some of the key tasks that fall under negotiation and closing include drafting a term sheet that summarizes the private equity firm's proposal, evaluating recent deals in the market and valuations to determine what to bid, speaking with investment bankers to determine what amount to bid, working with lawyers to draft a share purchase agreement, and something the associate will have to do, preparing a funds flow model, which essentially outlines where all of the money is coming from and where it's going in the transaction. The final part of the process is to manage those investments and eventually sell those investments, ideally for a profit. Now, if you're on a deal team that worked on that transaction, it's very likely you'll stay involved with the management of the portfolio company once it's in the portfolio of the private equity firm. It can be hard to generalize what private equity firms do in this situation, but it can be anything from issuing a dividend or employing some kind of financial engineering. It could be helping the company do M&A or expand internationally. It could very easily be making introductions for potential partnerships with other companies in your portfolio. At this point, it's really the private equity firm's goal in order to maximize the value of that company. Oftentimes, a lot of private equity firms actually take a back seat. They just want to back excellent management teams and let them do their thing and only be a provider of capital. So these are the main functions that pretty much every private equity firm has to concern itself with. I think a good rule of thumb is that it's often the role of the junior team to create the deliverables. That means the actual Excel files, the PowerPoint files, the documents that inform a lot of the decisions. And then it's generally the goal of the senior people to execute the actual decision making, employ critical thinking, as well as make external relationships with potential investments and other firms. Thank you for watching, and I'll see you in the next one.